Welcome, everybody, to another webinar from the Center for Agricultural Profitability at the University of Nebraska-Lincoln. My name is Ryan Evans. I'm a communications specialist with the Center for Ag Profitability, and want to invite you to check out our full schedule of upcoming webinars that happen typically every Thursday at noon right now, noon Central. That's on our website at cap.unl.edu/webinars. And while you're there, you can also find an archive of past webinar recordings, including this one that should be up in the next 24 hours or so, if you want to revisit it or share it with somebody who you know who maybe couldn't attend live today. And today we're talking about Nebraska crop production cost estimates for this year and a little bit about creating your own budgets using the Ag Budget Calculator program available from the University of Nebraska-Lincoln. So during the webinar, we will provide an overview of this year's Nebraska crop budgets and current cost of production estimates, as well as take a look at key input cost figures used in 2025 budgets and changes or trends that have happened over the last several years in those costs. With the 2025 Nebraska crop budgets available to download into the ABC program, enterprise budgets can be modified for individual farms and fields. So we'll also have a brief look at the analysis features that are built into the ABC program, like the risk module. And to be our guide and present today is Nebraska Extension Educator and Farm and Ranch Management Analyst with the Center for Agricultural Profitability, Glennis McClure. And Glennis works every year to lead efforts on getting these new crop budgets updated, as well as being part of the agricultural budget calculator development team. So if you have any questions as we go for Glennis, please do type those into the Q&A or the chat box in your Zoom window, and we'll definitely work to get those answered as best as we can. So Glennis, thanks for presenting today, and I'll turn it over to you.
All right, thank you, Ryan, and welcome everyone. Thank you for taking time to learn a little bit more about what we've got going on now with our 2025 crop budgets and how that fits in with how you can use those budgets as a resource in a number of different ways. So we're going to talk about that throughout this webinar. And you're welcome to ask questions, and we may save some of those to the end. Ryan's going to monitor the chat. So if you have any questions, go ahead and put those in the chat. And either he'll chime in if there's something urgent that we need to answer right away, or we'll save those questions to the end. So again, welcome and thank you for your interest in what we're doing with our budget, and also our Ag Budget Calculator program and the other resources that we have through CAP. So, all right, we'll go ahead and get started. All right, so just with and Ryan kind of gave you an overview of what we're going to talk about today, but I'll kind of go over how we prepare our crop budgets and what formats those are in so that folks can use those in different ways. We're going to look at a few charts and graphs to look at what's changed for 2025. And why should we even worry about doing enterprise budgets? And, you know, that's definitely, I think, a very important point that we want to make, as well as then we'll look at what's included in the Ag Budget Calculator and how does that fit in with what we're talking about as we look at our Nebraska budgets. So this year we put together 83 different Nebraska crop budgets representing 15 different crops. And this year we added a popcorn budget. It's actually an irrigated popcorn budget because actually Nebraska is second in the nation in growing popcorn. So hey, it just made sense to put a budget like that in, and it is an irrigated budget. And it was built off of one of our corn budgets. And so just as a reminder, and we'll refer to some of these things as we go through this webinar, but all of our budgets are found on our website in, again, a number of different forms, cap.unl.edu/cropbudgets. And then also usually our Crop Watch web folks put a link up for that. Just one word, some of our websites might look a little different. The university had us go through a change in that whole web-based setup. So some things, if you don't see something that's normally been somewhere, be sure to let us know or ask questions about that. because I know Ryan, and we're so thankful to have Ryan, but he worked on moving over our CAP resources into a new web-based system just recently, and I know CropWatch did the same. So just let us know if you have any issues with anything. And then as I refer to the Ag Budget Calculator, all of our crop budgets, all 83 of those were downloaded into the Ag Budget Calculator. So they're there. You can look at them, you can look at the reports, and you can actually download then those a budget that might fit what you're doing into your Ag Budget account, and that's agbudget.unl.edu. So everyone creates an account that's a user, and that's just by putting in your email and creating a password so you can come back to it as you need to from time to time, and so on. So, but all of those budgets are loaded into the program. And the reason is that, again, keep in mind that our crop budgets are really designed to be more of a guide. They really do not represent any one individual producer. Yours could be quite different, but you can use what we do as a base to go ahead and build and work on your own. So, because your cost of production might be quite different than someone, even your neighbors, next door. How do what do you apply for fertilizer, chemicals? What is your machinery cost? All those things can really vary. So here I show just what the screenshot looks like on our CAP website. And we've got, again, as I said, we've got a PDF version of all of those budgets. So it's a lengthy report, 90 some pages long. The first several pages of that, there's an index. There's also an explanation. So sometimes you might wonder, well, how did you come up with this? Or, there's some good information, I guess, in those first introductory pages of that report. So that's actually the PDF file. And then we still have been doing our budgets in Excel. And so some of you have used those that way for a long, long time. So all of those 84 budgets are in a nice worksheet with all of the, along the bottom, all the worksheets pop up. So you can go to a certain budget and work with those. But, we know that a lot of people, might now have Google Sheets. They may have other systems that they're using. So they may not be using Excel to do budgeting. So we also then again put those all into our Ag Budget Calculator, what we refer to as the ABC program. Then over here on the right, I'm just kind of showing you the different budgets, different crops that we do have included. And again, there's 15 or so different categories of crops that we've included. I guess 16 now with popcorn. And that's just to give you an idea of what we do include. So we've got those from Western Nebraska. We have some Eastern Nebraska corn budgets, but generally you'll see a lot of statewide budgets too. Again, it's hard to do those geographically. One of the things we have started to do is work with some different areas, different crop reporting districts, and do some more refining of some of those budgets. But it always takes working with our extension folks in those areas and also producers. What would be different in this dryland corn budget or this irrigated corn budget that you do, in your area in general. So we haven't, we'd probably end up with, we have 80 some budgets now. We'd probably have 200 or 300 if we started to doing those kinds of things, and resources, limited time and resources kind of prevent us from doing that. But okay, so and I do want to mention, and it's very, very important that we work with our crop specialists in putting together information into those budgets. And I've worked really closely again this last year with Bob Klein out of our North Platte Center to put the budget information together. And you can see the list of folks that, contributed to those budgets. I know I think we had some fungicide changes. Tamara Jackson Sims, has provided some information on that in particular. So, we check to see, how are those practices, what's changed, from year to year as we put together our budgets. So what's the most important resource that we have when preparing budgets? Now you might think, what do I have? I guess one would be sort of history, right? History. And our records, looking back at our records. So as we do detailed work and, what fertilizer did we apply this last year to, our different crops? What was that? What does that record show? And how does that change as we go forward? What's the price changes this year? Are we changing our practices as far as what we're applying? Those kinds of things. But basically, just looking back and using our records, I think can be, a plus for sure. Okay. So this chart, here's what it's kind of familiar. If you listen to my presentations, I've done this kind of thing in the last several years, but I've just taken the 2024 and 2025 and just pulled some prominent, budgets, and I basically have averaged our dryland corn budgets, which there are 11 dryland corn budgets. So I averaged out, for instance, that yield expectation to be 150 bushels. That's again, statewide dryland corn budgets. All right. So if we look at what we figured our cash costs were in 2024, we had 307 and our economic costs were 477. All right. So now in 2025, how has that changed? Well, you can see there's a little bit of a dip, which is good. Our cash costs are a little lower. Economic costs, again, they're kind of in line, a little bit lower as well. So you can see kind of the pattern here. Irrigated corn, again, if I took all of our irrigated corn budgets, I'd have a 239 bushel yield. And you can see how those costs have changed from 2024 to 2025. All right. And then dryland soybeans, irrigated soybeans, and how those costs have changed, as well as wheat, some wheat budgets. And so you can see basically across the board, we have a little less cost calculated in. Now this one, irrigated soybeans, actually went up, all right? And our dryland went down slightly. So the difference between cash and economic, though, is something that we want to talk about. In that cash is just cash. So if you're a cash basis, tenant, and you pay cash rent, you would figure your land cost into cash. So your figures might be quite different here, all right, than on the cash side of things. Economics, what we kind of calculate with our budgets is that we assume that there's ownership and there's an opportunity cost. So opportunity cost of owning equipment, of our land values, our land, and our depreciation, which is a non-cash cost, are what those items are that show up in our economic side of things. So it definitely, I really caution those that are cash renters, that you're probably you really need to do your budgets, and you can kind of see what your actual cash costs are, because that's going to differ significantly, and you're going to be closer to the economic cost of things, in your budgets. And we talk about this as well from the economic point of view or perspective, is that, in the short run, we might get along, okay, in a year, 2, 3, whatever, where we're just covering our cash costs. It's important to do that, obviously. Otherwise, we're going to have cash flow issues, working capital issues, all those kinds of things. But in the long run, you want to be able to cover all costs. Again, being able to, pay, reinvest, that depreciation cost is in there, make sure that we're paying for our land over long term, or have an investment return on our land. Okay, so in the long run, we want to make sure that we're covering our economic costs. So I do have over here as well, the Nebraska Farm Business Inc. We work closely with Tina and folks there. And, they're right now closing books for 24. So they're always just a little, obviously their figures are going to come out, for 24 here, in a month or 2 or 3. All right. And so I grabbed the 23 information just to show you that this was of the folks that were there doing actual records. All right. And I actually took this from FinBin, which is the University of Minnesota program, but the NFBI, they supplied their information into that program. It's a database where we can look and do some benchmarking, with different producers and so on. But we're seeing here that basically of all costs, our dryland corn with 111, that was their average yield of all of the folks that they had entered data for. They figured 568 and 402 on irrigated corn, and this was the yield. And then their soybeans were at $12 and 11.77. So you can see those figures are higher than what we're projecting here, or even what they were in 24. All right, and you can see the yields they base those off as compared to the yields that we included. But the purpose of me showing you this is that, you know, actuals can vary. For one, again, we're projecting, we're estimating, you know, as we're doing our budgets. But it's really important, I think, to look at your figures and to again, you know, what are you basing that per bushel on? What is your yield? You know, should you be using like an APH yield? And we'll include that in an example here coming up. But I just wanted to show you that it can really vary as to what our costs are. Again, we're estimating, these are actuals. They don't align, you know, exact, you know, in how they run their figures and how we do ours, but we're going to be in the ballpark. I also, you can look out online. I mean, Iowa puts together some budgets. I was actually looking at some details from Illinois and trying to match up, you know, kind of where we were with some things. And, you know, they definitely showed for their, as they're looking for at 25, you know, they're looking at, again, a southern, you know, corn yield, southern Illinois corn yield of 195 bushel. I mean, they're looking at total costs of 466. So we're kind of in that ballpark here with both our dry land and our irrigated. And with soybeans, they're looking at 1156. Okay, so, and that's with a 61 bushel yield. So again, I just kind of look at that and kind of compare, you know, where we're at with our costs. And you know, obviously their land, I noticed they put in fertilizer into their soybeans, and in our budgets, we don't include fertilizer. So anyway, just always lots of things to look at and compare to. So here I just showed you, I'm just showing you kind of what makes up those budgets and our seed costs. This is a dryland corn budget for 2025, and we're looking at seed at about 12%, fertilizer 9% of the total costs on that. But land, look at land and real estate taxes, 31%. That's the red bar here. Other materials and services, we have crop insurance included on our budgets, and so on. There's overhead costs and operating interest as well. All right, and you can kind of see that breakdown here and where we were with our cash costs and our economic costs for that particular budget now. And then looking at that same budget from 21 to 25. So what's changed? So, and we're going to look at some charts here in a little bit again too, but you can see what seed costs have done, how our fertilizer costs. So 25 is the last bar here. Okay, 2025 is the last, the purple bar. Pesticides, crop insurance. Crop insurance is backed up probably because of prices somewhat. At least that's over our projections right now. Our machine ownership costs, maybe some of those things have softened a little bit. Land taxes and ownership. We pull information from our Nebraska real estate report, and we have continued to see our land values, and which we base our opportunity costs on, have been going up. And actually, operating interest is, you know, a piece of the budgets, and that has gone up obviously a little bit in this last year or so. So let's look at, you know, we have diesel and we have fertilizer. So oftentimes our pesticides, fertilizers relate to what's going on in the oil market. And so this is our diesel price. So in our budgets for 2025, we figured $2.78. Now I should say too, keep in mind that we start to do this research, start to look at those prices and so on in the fall of the year. And so, well, August, September, even into October, but we're checking those prices and kind of deciding on what we're going to use in our budgets. And so we're back at this. So basically we're back at that 22 level with this diesel price. So that's what we put into our budgets. And then our fertilizer, you can kind of see how here's what's happened with the diesel prices that we've used in our budgets, and what this fertilizer cost has done. And so it's back down as well. And we're using about 50 cents per pound of N into our budgets for that particular fertilizer product. Glyphosate, a few years ago too, as we're coming off the pandemic, we weren't even sure we were going to get what we needed for that. And you can see how those prices have come down. So this year we're using $17 a gallon, similar to what we had last year in 2024. Seed prices continue to go up. All right, but what's happening with the technology? Are we, are yields going up now? We don't adjust our yields and our budgets that quickly, that often. Occasionally, I think a year or two ago, we did make an adjustment. So you have to keep that in mind. But there is technology. There's, we've got, oftentimes more production. Even though the seed technology, and we're paying for that, it's going up. All right, and it continues to do that. So that's the trend since 2015. Again, those are the figures. That's what we've been using in our budgets. All right. So then I look back at where we were with our land values. We had some softening back over in this period of time, and then things have gone up ever since. So this is an irrigated, pivot value that we've used from the Nebraska Farm Real Estate Report that the University Extension puts out, and then our dry land value. And you can see what we've used in those budgets for those figures and how that's changed and where we are in the 2025 timeframe with those. So that hopefully gives you some background of what some of the key points are, what we put into our budget. So why has our corn cost come down a little? Wheat definitely has, again, soybeans. So some of our chemicals, some of our pesticides, some have gone up and some have come down. So it was kind of somewhat of an even keel on our pesticides, but definitely our fertilizers came down and our fuel costs have come down. So I think that added to how some of our costs have changed. All right, so these may look familiar. I've got, and I will be publishing Cornhusker Economics here within a week or so, and I've got, well, anyway, I'm just showing you here an irrigated corn budget number 33, which is a 275 bushel yield budget, no-till after soybeans. So it's an irrigated corn budget, I think electric pivot. And we're looking here at our cash cost line and our economic line. And so again, it was our, these are the, how those figures have changed from 24 to 25. You can even look back to 2015 and see how things have changed over the time there. And so those are our blue and our red lines are our cash costs and our economic costs. Economic costs are generally going to be higher because we've included the land values, opportunity cost, depreciation cost in those. So economic cost, you'll always see higher on the chart. And then I've plugged in a price per bushel, and I've used the crop insurance harvest price guarantee for that particular year, basis not included. And that comes off of rain hail information. But I go back to the 2015 timeframe. So that's the green bar here and where our prices were and how that they've come back. Of course, I don't have 2025 plotted in yet because we don't know. We don't know where we're going to end up with that, but where we are with that figure. And you can see then for 2024, that price dips below our economic cost. So we were showing a negative profit margin of a negative 10 cents per bushel. So that yellow bar is that profit margin, which is that price minus our economic costs. Okay, so again, we were struggling along here a little bit, did pretty well, and we've started to come back down. So what's that trend? What's that trend going to be? And then this is a soybean budget. Again, this is a dryland soybean budget. So it's after corn. So it's in that corn rotation. And again, so here we have the price is in the green bar, economic costs above our cash costs line, all right? And then what is our profit margin done? So you can see kind of a similar pattern to what corn did and how we've dropped below now into the negative on, our profit margin per bushel based off of 24, and we don't know what 25 is going to offer. So, but we did see, at least in this particular budget, a softening of the cost, from 672, our projections, down to 632 on cash and 980 on economic cost. And it all depends. One of the variables, of course, in a lot of this is our yield. And I believe, I'm sorry I don't have that on there, but I think it's a 50 bushel yield on this particular budget. And you can check any of those budgets out online as well. So, all right, well, I think it's important to know our cost of production for a number of reasons. And so knowing our cost of production and our break-even levels provides a guide or an anchor so we can make some informed risk-based risk management decisions and some marketing decisions, okay? So asking yourself what your projected per acre investment in growing your crop, and at what level is your level of risk exposure. So with that, we also want to ask what our crop insurance coverage is needed relative to our per acre costs or our investment. And then asking ourselves too, and it's kind of a critical point right now, is do we have adequate working capital to survive a disaster or market shock? And again, what can we do with crop insurance to mitigate some of that risk? And we'll look at an example here in just a little bit on that. You can also, crop budgets, understanding cost of production. This can inform us on comparing one crop to another, what might be more profitable in a given year potentially. And for those enterprises that provide the most promising returns, this might be where we want to focus our time and resources. And then understanding our production costs can help us compare from year to year and benchmark our enterprise information against other producers. And this can guide us in making decisions on, again, cost controls, what to produce, machinery investments, and our inputs. And so a lot of that, there's just a lot of reasons why I think this cost of production can be so helpful. And I do want to share, this is a couple years old now, but we did a paper, and it's on our CAP website. So you can go to articles on our CAP website. We talk about management decisions that could be made easier using our agricultural budget calculator and cost of production information. So I put that there. All right, so just, I guess that's a segue into the ag budget calculator. We have producers that use the program. Farm managers, we do teach it in some of the classes, so students are getting familiar with it, as well as bankers and ag industry folks, for sure.
Glennis, sorry, before you get into the ABC program here, there's one question that just came in.
Sure.
If you could help clarify, in the online budgets under ownership and overhead costs, what is included in equipment and land opportunity cost?
Okay, in equipment and land up. Okay, so what we do with that is, in the budgets, we ask and we plug in a figure for, what is your investment cost? What do you have for an investment in your equipment? And what is your value of your land that you're using? So land opportunity cost, basically, you would take what we actually show in the way we work it, primarily in the ag budget calculators. We ask, if you weren't farming it, what could you rent that land for? So it's kind of a rental value as an opportunity cost on land, all right? So we, as we're putting together our budgets, that's really how we look at it. Like, what is that typical rent in a particular area of the state, or what's that value times an investment return? Now, we in the last several years, at least since I've been working on the budgets, we've kind of stuck with that 3% investment, rate of return of investment. Now, we know the stock market, we know CDs, those rates have changed. So you could change your own figures in there, especially if you're using the ag budget calculator. It's easy to do that. but we kind of stick with a similar figure. So you're taking your investment in your land, or your value of your land, times that investment rate of return, to figure out opportunity cost, or what could you rent it for, all right, if you weren't farming it. And then also the other question is, what's your equity, what's your investment in your equipment? What could you do with that? Let's say you weren't farming, you could sell it, put it on interest. That's your opportunity cost. So opportunity cost is a pretty big figure, especially when we're looking at the economic cost of things, right? As well as depreciation. So depreciation costs, and there's an investment cost that we figure in on the economic side of things. So I hope that helped clarify that. All right. So I'm going to just share a few quick slides on the Ag Budget Calculator to kind of let you know what you can do with that. Again, it's web-based. You know, again, you can create an account and go in and work with our budgets, and then you know, download those. You know, make them your own, rename them. You can actually just start from scratch. You don't have to use the university budgets to do that. So I'm hopeful that we have some people on that have worked with the Ag Budget Calculator and have even just created their own. I've had people say it's pretty intuitive. You can go on, you can start working with it, and it works pretty well. All right. So we can download and modify our budgets, and we can do farm by farm, field by field. Because again, you might be cash renting a certain farm, and the rest is owned. All right. So you can take a look at how do your costs differ with that. All right. And or you could even go field by field, you know, whatever it might be. You know, one field, you know, 5 miles away is more productive than another field. All right. So your yields might change. So you can make those changes. Or you can just simply say, hey, I'm just going to do a corn budget, a dry land corn budget, or an irrigated corn budget. And you know, you can do it simply, or you can be more detailed. And we do have duplication features in there. So when people, let's say you do one corn budget, and let's say you have 10 fields of corn, you can actually duplicate those, rename those, go in and make the few changes that you need to, and then you've got all of your different budgets, and you can pull those all together and then get one cost of production. Because as you're harvesting that corn, chances are you're going to sell it as corn, you know, and so you've got your one cost all pulled together there. All right. And again, the system is set up to work with cash and economics, so we can do a cash report, economic reports from our Ag Budget Calculator. And then we've got analysis built in. What we really wanted to have happen with the Ag Budget Calculator could be a decision, you know, helping tool, all right, or resource for you, all right. And you can plug in revenue and actually do what I call it like a pro forma profit and loss. If I've got all of my crop budgets in, I can have a whole farm report where I plugged in what I would anticipate for prices this year for revenue, and I can take a look at what even my profitability overall might look like. So in our budgets in the past, our Excel budgets, we did not include revenue. So, but you know, with the Ag Budget Calculator, you can add that in. All right, so I really would welcome, I would really, I guess, encourage you to take a look at, you know, a budget. This is what the overall budget detail would look like. If you're opening up the details, this is an economic budget. We could do a cash enterprise budget. This again is that corn number 23. I plugged in a figure for 2025 for revenue. You can see the seed costs. You can open up these details with these little triangles here. You can see all the products that go in under operating costs. You have labor costs, fuel, repairs, other, and so on. So we have a net return above operating cost estimate. And then we have ownership. And again, in some of our budgets, you might not see facility cash costs or vehicle, and you would have those. Let's say you have a pickup that half of it is used for checking crops and that kind of thing. You would have some costs there. You might have some bin costs. You would have costs there in your budgets if you plug that information in. Again, we've just put in an overhead cost to cover some of that. You know, overhead including our utilities, you know, our accounting. You know, it can include some of these other factors. property taxes that we're paying on facilities and so on, okay? So, but this figure may not be what yours is at all. You know, again, this is how much was attributed to this particular crop, and this is only 300 acres, 145 bushel yield. But so this is what's attributed to that crop. But, you know, what is your overall overhead? And you can actually then in the program allocate that for each of your enterprises. And this land rent, again, and this might be, this says cash rent. So this might be, I don't know, I don't recall, but let's say this was sort of the average figure of cash rent as an opportunity cost, because we don't have land opportunity down here. So this was actually an example where we did plug in a cash rent figure, all right? And we don't have it under, so you wouldn't have both, all right? So the land opportunity cost in this case is 0. We do have equipment opportunity cost, and we do have equipment depreciation in here. So we're looking at a 417 economic cost in this example. And if we sold for 427, we'd have a plus 8 cents per bushel. And for this 300 acres, that's what would be showing for net. So that's basically the first page or two. And you can collapse the details. You don't have to have all of this detail showing. I think as I put those into our budget program or into the examples showing you or the reports that you would look at, you'll see this detail as well as the next couple pages here. This page is our field operation costs breakdown. So we patterned what we did with the ABC program after. If you look at our Excel sheet, you'll see all these different costs for operations. And so including labor, fuel, repairs, depreciation, and opportunity cost on that equipment, and all the different operations that we do. So that's our operations report. That's usually page 3 then, as you look at our budgets online through the ABC program. All right, and then so you can see that total. And the next report, the last page then, is our materials and services report. And that again is where you can see the breakdown of those products that go into the budget. So we can see what we included, what kind of price we had, you know, what we showed for, you know, like here, this fertilizer was $3.10 a gallon. Here's that 50 cents on the 3200 per pound of N. So you can actually look at some of those cost figures in there. And we do have all of our, I should say, if you look at that PDF file, or even the first few pages, first few worksheets of the Excel file, you'll see all of these prices that we've used for our 2025 budget. So all that information's in there somewhere. It'd just be great if you could get familiar and really use those. So in addition to those reports, getting our cost of production information, we've got some analysis tabs in the ABC program. So we can look at a break-even analysis. We can actually compare a base crop to up to 3 different crops and look at that break-even and look at that. We can look at input price sensitivity analysis, a risk analysis page, which has to do with our crop insurance, and then a sensitivity chart. So those are some of the analysis features that we have in the Ag Budget Calculator. And I should say at this point in time, I don't have time during this webinar to go into details with you, but I do have, and I think actually even on Monday, no, I think it's Tuesday next week, I do have like an hour and a half that I'm just going to focus on teaching people the Ag Budget Calculator. And so you're welcome to go again to that CAP webpage. It's cap.unl.edu/ABC, and you can register and get the link then for that teaching session, because it works really well to show it online, and I could go into more detail, but I do want to mention that if you've not had a chance and you want to learn more, that's your opportunity. And then I also do Q&A sessions ongoing and answer folks' questions as they need, but I do schedule those Q&A sessions so folks can hop on and ask their questions and you know, share information so that others can learn as well. This is just a picture of if I have a base crop of corn and I want to compare that then to a dryland soybean. This is a dryland corn budget. Compare it to a dryland soybean budget. I've got both of those budgets in the ABC, and so I can take a look at what does that mean? And so right now I've got so if, let's say here, we've got 425 is our, let's say I projected 425 a bushel on corn at 445 bushel yield. All right. So in order to have a gross margin equivalent yield analysis, basically I have to have, for that bean crop, I need to have 52.8 bushel to equivalate what this corn crop's going to provide. All right. If I want to look at it on the price basis, so let's say I have 46 bushel yield. So rather than here, I'm looking at it on given the projected price, you would have to produce this yield to, per acre. So you'd have to have 52.8 bushels per acre to equivalate that. Given the projected yield, you'd have to have $11.25 for your soybeans to equal that corn crop. So again, we could add in another alternative crop. We've actually 3 more alternative crops into this analysis if we wanted to take a look at some things side by side. And a few years ago, when some of the products weren't readily available, we didn't know if we were going to get, let's say, glyphosate for our soybeans, we could do some kind of analysis and take a look at what is that soybean, again, with some of the input prices high the way they were too. What if I, switch some acres to another crop? What would that look like? And so that really kind of prompted us to work with getting this module in. The risk module is it's really a neat tool. We figure off of our crop reporting districts in Nebraska, and it's for corn and soybeans. So if you've done corn budgets or soybean budgets, you can utilize this module. And basically, we're looking at all the figures that go into sort of calculating what level of crop insurance, if I picked, a 75% revenue coverage, right? What would my return look like? So after I look at a budget and then I kind of play with those different coverage levels, how are things going to turn out? If we end up with some kind of disaster. There's information in here, like let's say this budget was 145 bushel per acre. The NAS average in that particular crop reporting district, Gage counties in southeast Nebraska. Here's this information to show you this is what the NAS average has been running in that area. And then what happened, the disaster, the worst disaster, at least in recent years, so to speak, happened in 2002. We only had 53 bushel per acre, and you could click on here and see what was it that happened. Well, chances are it was a dry, droughty year, and you can switch between our yields and our price exposures and so on. So what happens here when you work through all the numbers, you can see what your original plan would be. Let's say I've got 145 bushel yield projected, kind of things are going to be what I would say is normal. And let's say I end up with, let's say you can plug in, I end up with 80 bushels and I've chosen a 75% coverage. What does that look like? What is my risk exposure then? And so that's how that module works. So again, I've just kind of gone over that with you, that we provide some historical data and then you've got a projected disaster budget. But you've also plugged in again, your crop insurance, what that cost and what your level of crop insurance would be and what that might look like given a particular sort of disaster for corn and soybeans. But I wanted you to also think in terms of this whole cost of production thing and think about it from a working capital point of view. So this is a relatively new slide. I appreciate Dr. Corey Walters, again, and visiting with him and how he looks at things in risk management. And, how should we equivalate what we're learning off of cost production into that? So let's say we do our budgets and we do them off of an APH. So in this example, we've got a 200 bushel per acre APH. All right. And so it figures out that our cost per bushel then is 405 or 810 per acre. Okay. So our December price, let's say, is 440. Our expected revenue then would be $880 per acre. So let's say we go through this whole thing and we pick a crop coverage level of 75%. So our guaranteed revenue would be $660 an acre. This again is in general simplistic terms, right? Okay. So risk exposure, $810 per acre. That's our investment. All right. Our investment cost per acre, minus that 660 guaranteed revenue, we'd have a risk exposure then of $150 per acre. So the question to ask then is, do I have enough working capital to survive if the crop production or prices don't go as projected? So if not, maybe there's an 80 or 85% coverage that I could consider. Okay. So as always, these are estimates and can vary based on actual production. So again, we had this cost production based off this 200 bushel. However, it helps to get in the ballpark of knowing what our risk exposure is when we work through examples like this, right? And I think it's pretty important to take a look and to think about those things this year, especially as we have the commodity prices, or at least, who knows, but the projections right now are, either short of covering cost of production or just over that. I think it's also, in addition, as I mentioned, I think it's really kind of a cool thing in our ag budget calculator that if we did all of our budgets and we pull them all together, we could take a look at what our pro forma profit and loss might be. And I really haven't talked much about the livestock piece of it. We're really, really getting close to actually launching. We'll have a soft launch of that livestock budget where you can actually do some livestock cost of production things. And then we still have a little bit yet to go to get that plugged into the whole farm. So once that's there, we should have a whole farm profit and loss possibility. But in addition to all the work that you're doing when you're doing, and you're sitting down, hopefully at your laptop or your desktop and working on budgets now. But if you plug in, like when you're anticipating, needing to spend money, or need products, you're using products, the ag budget calculator will generate a cash flow, a month-by-month cash flow. So what it shows you is when you need that. So when I'm applying fertilizer, when I'm planting in the springtime of the year, and I put those things into my operations as I'm plugging things in, it's going to show up that cash is needed, or I'm going to have to, that's when I'm using things, all right? But then you can adjust our cash flow in our ag budget calculator when you actually are paying for those things, whether you're paying for them a little after the fact or you're paying them way ahead of time. So some of you have already done some prepays and you could adjust that cash flow accordingly. All right. There we go. It just flipped on me. Okay. So this is just a picture of what the ABC cash flow looks like. So again, you could plug in your beginning cash. You can look at the details. So, when we have these little red with their underline, we can open up the details. Again, this is a screenshot, but there's just a lot of details. Obviously, this materials list is a huge list, and it shows up. I don't know why. Oh, shoot. Anyway, so, it opens up so you can see all the details and when those products are being used. Same with overhead and so on. So this will generate or help you start a cash flow. And we have that made so that it's you can download as a CSV file. So you could actually, once this is in the ag budget calculator and you've got all this good data, you could actually share it over into like an Excel or a Google Doc or whatever, and work with it from there as well. So we do have that feature built into this part of the program so far. Lots of ideas, lots more to come with the ag budget calculator, but I'd say you folks with crops, it's working really, really great, and so many great features in right now, and we love to tell you more about it. Just another feature here with our irrigation in Nebraska is that we do have an irrigation, some irrigation figures where you can actually look at. So towards the end of the season, what's it going to cost me to put another inch of water on? Okay, so once you've got all that, that data in there, this will provide you some more analysis and some more information. So we've really, had fun using it. We're planning to do more with on the marketing side of things. So if you put in your budgets, And that's one of our hopes within this next year or so is get more done with the marketing module. And also capital budgeting. So when I'm making some of those decisions on purchasing capital, what does that look like? So that's coming, as well as now we've got specialty crops. So if you're growing pumpkins, you're growing other crops that you're selling at different markets, we're going to be kind of adjusting some things in the ag budget calculator to help those producers as well with the ag budget calculator. So just always lots to do, and it's been really quite fun to work with. So I would be remiss without talking about who helps fund that. We definitely have been very blessed to have North Central Risk Management Education funding through USDA to help design and produce that program. And we had initial support from Nebraska Soybean Board, and we've been very thankful for the work and the interest that Nebraska Corn Board has provided to us as well. Okay, so are there any questions? Let me take a look.
We've got one more question for you, Glennis. And while I'm reading this and as we're wrapping up, invite anybody else who has questions for Glennis to please type those into the Q&A or in the chat box, and we can get to those before we wrap up here. But one person said that they are new to farming, looking to manage costs. So they're wondering, other than depreciation, if you have any advice on how to figure in wear on parts and then tasks like rebuilding things like opening discs or firming points, components on a planter, for example.
So well, one of the equations that we use to figure machinery cost in the program is we've used the ag engineers formulas, and generally you'll see with a new item, let's say you're buying new, our depreciation costs, over time our repairs basically go up, right? As something gets older, and our depreciation costs come down. So something new is going to have more depreciation, less repairs, and so that's going to happen. So that's kind of, we really don't have built in any decision making type things with that. But I guess you have to look at I've used this a lot to help people understand really what their cost per operations are. So again, I work with the custom rates report, so I do get questions quite often of what should I charge of what it's really costing me, and that we do actually have that within the program. So you could take a look and say, okay, if I'm anticipating these huge repairs, okay, would I be better off just buying, and what would that depreciation cost be if I was using, if we were using just sort of usable depreciation, or depreciation. It's not tax depreciation. It's like, if is this something that you're going to have for 7 years, 10 years, what's that going to be? So yeah, we can plug some of that information in and take a look at it in the program. And I didn't mention that, but I've really appreciated that piece of the program, so I can help people take a look at really what is it costing you to run that combine, and that would include labor, fuel, repairs, opportunity costs, and depreciation. And I get folks asking me, what should I charge if the neighbor asked me to do the harvest for them or plant for them or whatever? And my answer to them is, make sure that you're covering your costs, and we can take a look at that with the information that we put into this program for sure. Hopefully that's helpful. Okay.
Great. Thank you, Glennis. Last call. If anyone else has questions, please type those in now to the Q&A or chat. And before we get out of here, I want to let you know we'll be back tomorrow with a special webinar at noon Central Time. Again, you can find that on our website at cap.unl.edu/webinars. I put that link in the chat. We're going to be
talking about the topic, Ryan?
Self-insurance. So it's an interesting approach. Dr. Corey Walters, who you mentioned, he's going to be talking with two Nebraska farmers, and they'll be sharing their experience with self-insuring as a way to kind of help with some increased flexibility for them over financial planning and better control over risk management. So some interesting perspectives to be shared tomorrow at noon.
And those are always recorded too, so if you can't make it that time, you can always go back and look. And I appreciate, Ryan, that you put the links in the chat on the different things we talked about. So thank you.
Absolutely. And I think we also, before we go, we wanted to mention if anybody is involved in providing or paying for livestock related custom services. Glennis here also doing the custom rate survey for livestock related services right now. If you
Yeah.
want to talk a little bit about that, I'll put the link in the chat.
Yes, thanks. So, yeah, by the end of February, we're gathering those surveys. So again, if you've got livestock and you are paying someone else for any services related to livestock, or you are actually providing that service to others, we're asking for you to fill out the custom rate survey. We have a lot of folks, again, that call, all of our extension folks across Nebraska, and are asking for that typical kind of information. And we always caution them that as we put out those reports, that those are, again, just guides. And like I said, that's a good, like the regular custom rates survey that we do every other year is pretty focused on the crop side of things. But again, I always caution folks that that's just one resource. It's a market study, but you also really need to know your costs. And so same kind of thing with the livestock, but our livestock folks and, really appreciate that we've got information, and the only way we can do well with that is to have a lot of participation. So thank you again. Ryan put that link in the chat, so you can go there and you can request a survey or request the link, and we'll get that to you to go ahead and participate in that. So again, thank you.
All right. Thank you, Glennis. And if you have any questions that come up after this, you can see Glennis's contact info is there on the screen. Feel free to reach out to her or anytime to us, excuse me, here at the Center for Ag Profitability at UNL. We're happy to help. And I want to thank you very much for attending the webinar today. When you close out, you'll see a really short survey that will pop up just asking you for your thoughts on today's webinar and what you're interested in learning more about as we move forward throughout 2025. So thank you again for attending, and thank you, Glennis, and I hope everybody has a great Thursday afternoon.
Thanks. Bye-bye.